I am going to be honest with you. 2 years ago, I was terrified of investing. I thought the stock market was a casino and that regular people like me always lost. I kept my money in a savings account and thought I was being smart. I was wrong, and that fear probably cost me tens of thousands of dollars in missed growth. Here is everything I have learned since then and exactly what I do now. The wake-up call came when I calculated what inflation was doing to my savings. I had $40,000 in a regular bank account, earning almost zero interest. Inflation was running around 3.5%. That means my money was losing roughly $1,400 in purchasing power every year just by sitting there. Doing nothing was actually the riskiest thing I could do. The first move I made was opening a high-yield savings account at Wealthfront and moving my entire emergency fund there. Instantly, I started earning over 4% APY on cash I needed to keep liquid. That alone was earning me over $100 a month for doing absolutely nothing different. But a savings account is not a wealth-building tool. It is a parking lot. Real growth happens in the market. I opened a brokerage account at Fidelity and bought my first shares of VOO, which tracks the S&P 500. I started with just $200 because I was still nervous. But when I saw that money grow by 3% in the first month, something clicked in my brain. I set up automatic bi-weekly investments, and I have not missed a single one since. Now I split my contributions between VOO for large-cap U.S. exposure, VXF for mid and small-cap coverage, and VXUS for international markets. 3 funds, and I essentially own the entire global economy. Retirement accounts became my obsession once I understood the tax math. My Roth IRA gets funded to the maximum every single year before anything else. Tax-free growth and tax-free withdrawals in retirement. There is no better deal anywhere. My employer offers a 401k with a 4% match, so I contribute at least 4% to capture every free dollar. After the Roth is maxed, I push my 401k contribution higher. I also fund my HSA to the annual limit and invest it entirely in a target date index fund. I do not spend from my HSA. I keep every receipt and let that money compound for decades. When I retire, that account will be a tax-free goldmine for healthcare costs. The game changer for me was discovering dividend investing. I added SCHD to my portfolio about 18 months ago, and watching real cash hit my account every quarter changed my entire perspective on wealth. It is not just numbers on a screen anymore. It is actual income generated by companies paying me a share of their profits. I also hold a small position in JEPI, which is a covered call ETF that pays monthly dividends at a higher yield. Between SCHD, JEPI, and VNQ for real estate investment trust exposure, my portfolio now generates passive income that covers my car insurance and streaming subscriptions without me doing anything. Every distribution gets reinvested automatically, and the snowball keeps growing. Risk management is something I take seriously because I have seen what happens to people who do not. My emergency fund covers 6 months of essential expenses and lives in a separate high-yield savings account that I never touch for discretionary spending. My investment portfolio is diversified across U.S. stocks, international stocks, bonds, REITs, and dividend funds. No single holding represents more than 20% of my total portfolio. I carry umbrella insurance for liability protection as my net worth grows, and I review everything quarterly to make sure nothing has drifted too far from my target allocation. Tax efficiency is the silent wealth multiplier most people completely overlook. I keep my bond funds and REIT holdings inside my tax-advantaged accounts, like my Roth IRA, because they generate ordinary income that would be taxed at higher rates in a taxable account. My growth-oriented index funds sit in my taxable brokerage account, where I benefit from lower long-term capital gains rates. Every December, I scan my taxable positions for tax loss harvesting. Selling losers to offset winners reduces my tax bill, and I carry forward unused losses to future years. These small moves compound into massive savings over a lifetime of investing. My entire financial life runs on autopilot now. Payday hits and money flows automatically to my brokerage, my Roth IRA, my HSA, and my high-yield savings. Investments buy themselves on a schedule. Dividends reinvest without me logging in. I spend maybe 30 minutes per quarter reviewing my accounts and rebalancing if needed. The system works because it does not depend on motivation or willpower. It depends on automation and consistency. Subscribe for more videos on personal finance, investing strategy, and building wealth from zero. Leave a comment telling me what you're first in,